Welcome back, ladies and gentlemen, to the Peak Trading Lab. Now in today's video it will be all about a commentary regarding the dollar index we've been sharing and also the trades that I've been taking and we've been taking. If you've not subscribed to the YouTube channel, consider subscribing because more and hot content has been lined up in a way and at least it will be very educative and it will be opening your eyes. So consider subscribing to the YouTube channel for more. Also remember to hit the notification bell so that whenever I post a new video you'll be notified so that you may not be able to miss anything. Now, this is the chart of the dollar index that you're able to see on the screen, and I've been bullish on this dollar index. Now, I've been calling at least the move so that the dollar index, I'm anticipating it to be delivered above this high. Potentially it can also go above these highs because on the daily time frame you'll be able to see that it is bullish. Before I talk about this one, look at this one, and I shared it. Now this is the dollar index. This is the 15 minutes time frame on how I've been framing the setup and everything. So this was our SMR, smart money reversal, and I said it is on the buy side of the curve, and this is the 15 minutes old high coupled with this order block. So this is where I said I'm anticipating price to be delivered above this high. So I've been bullish on the dollar index in as much as it has been in some sort of a range, but I've been bullish on the dollar index. Now let us go back to the other chart. Now, this is the 30 minutes time frame. I just added the daily divider so that you can be able to see it on a daily perspective and how it has been trending and trading on a daily perspective. Now this was Monday's trading, Tuesdays, Wednesdays, yesterday's on Thursday, and today's trading. And I said I'm on the buy side of the curve on this dollar index, and I'm anticipating the delivery above this high. Potentially it can also go above this high because on the daily time frame you are able to see that the dollar index is bullish. Now this particular place, it is our zone of volume imbalance in the daily time frame. You are able to see it in a few, whereby we had some sort of smart money reversal SMR, and I said at this particular section of price action, it is where you can validate it using the RSI because the divergence will work. So whenever the market gave us SMR and it gave us the breaking structure, it signaled potential bulls entering the marketplace. Demand is now stepping in the marketplace and supply is being exhausted now, whereby the market now retraced into this 15 minutes old high coupled with this order block 30 minutes and also the 15 minutes order block. You are able to see it. This is our order block inside the 15 minutes old high. Let me dive into the daily time frame so that you can be able to see whatever I'm talking about now. This is the section of volume imbalance that I've talked about. The market rebalanced into it, gave us now the final swing at this particular price, at least at this particular price point. And the dollar index has been pushing to the upside for so long on the daily time frame, and it is bullish. So I've been bullish on this dollar index, and remember the dollar index is our benchmark. We're trying to gauge the strength of the foreign currencies coupled with the dollar, and it will aid us and help us to trade them effectively. So whenever the dollar index is bullish, we're stroking sells on the euro USD and the GBP USD, and whenever the dollar index is bearish, we're anticipating a reverse in the euro USD and the GBP USD. They're inversely correlated. So the dollar index, we don't trade it, it is our benchmark. So it rebalanced in this volume imbalance, whereby it gave us this swing low. So I'm still bullish on the dollar index. I'm anticipating this side to be taken out and potentially this side to be taken out also. So let us go back to the 30 minutes time frame so that you can be able to see. Now in the 30 minutes time frame, this is the same thing. This is the section of volume imbalance that you're able to see on the daily time frame. The market, after diving and filling it completely, it gave us a break of structure at this particular price point, and now it has been breaking high significantly, and I'm anticipating the delivery above this high and potentially this short-term highs to the upside. So whenever the dollar index is bullish, we're also anticipating bearishness in the euro USD and potentially in the GBP USD. So this was Monday's trading, the weekly opening price, the market traded lower, then began going to the upside in as much as it was caught up in this sort of consolidation, but at least it has traded away from the weekly opening price. Now, Mondays through Wednesday, we're always anticipating the low of the week to be formed if you're bullish. And also Monday, Tuesday, Wednesday, we're always anticipating the high of the week to be formed if you're bearish. So in this particular case, the low of the week was formed on Monday on the dollar index inside this order block coupled with this old high. So having known whatever the dollar index has been doing, we reciprocated the same, but now in reverse because the dollar index is our benchmark. So whenever it is bullish, we're always talking the bears in the foreign currencies. So we took some trades in the Euro USD. So look at this, Euro USD. Now this is the Euro USD. This was Monday's trading. Monday's trading created the high of the week at this particular section of price action. Now, the market opened at this particular point for the week, rallied higher into positive 1 standard deviation to the pip, coupled with this rejection block. If you dive into the 15 minutes time frame, you'll be able to see it is a nice rejection block. Look at this. So it was to the pip, positive 1 standard deviation, and I was anticipating to take profits whenever the market rebalance in this fair value gap at this section, to take profits on Monday. So the market opened, we always seek to be a seller above the opening price on the daily opening price. So it was above into +1 standard deviation in confluence with this rejection block. Then the high of the day was created during the London session. And it was a classic ICT sell day. If you've not gone through the book about it is called Inside ICT Intraday Templates. I wrote it, at least I sampled out the different templates that do unfold. So go through the video, at least it will help you. So it opened, rallied higher into positive 1 standard deviation in confluence with the rejection block. You seek to be a seller. If you missed this move, you could have waited at least this retracement in the New York session, the optimal trade entry. If you drag your fee from this particular point to this point, you could be tagged into the optimal trade entry, and I was seeking to offset my positions whenever the market rebalanced in the fair value gap. So it was a classic ICT sell day, and the high of the day was created during the London session as much as it was high of the week for the entire trading week. On Tuesday, I didn't trade. I was quite unavailable, but this was the profile that did unfold the template. It was a classic ICT buy day. The market opened, declined, then began rallying to the upside. It came back rebalancing this fair value gap, whereby it continued going to the upside. On Wednesday, I traded. It was a classic ICT sell day. The market opened at this particular price point, rallied into this order block, then gave us a sell. I was anticipating to offset my positions whenever market was trading into this section of order block, to offset my positions fully. Yesterday, I didn't take any trade because the market was preparing for the PMI news release that was supposed to be released during the New York session. So it was consolidation trade on news release, the type of template. So the market was taking out liquidity on both sides, preparing for the New York session. In the New York session, we had the PMI news release, of which it took out the liquidity, the sell side liquidity, then gave us now the move to the upside. So in as much as the market gave us this move to the upside, it was a template known as the consolidation trade or news release. Now, most of the times we always have the low of the day or the high of the day formed during either the London session or the New York session. It won't stop. For this particular case, the low of the day was created during the New York session because the market was preparing for the news that was about to happen during the New York session. It was the PMI news release. Now, the market gave us these relatively equal highs, thereby was anticipating a sweep of about 20 pips that will aid me to get the next day's trading, of which it is today's Friday. So today, Friday, the market opened, rallied 20 pips. Considering this data, at least it is very, very key. At least it was in confluence in as much as it was in line with this order block at this section of price action. So opened, rallied, classic ICT sell day. After getting or gauging the pips, the desired pips, it was about 20 pips from this particular point to this point, 20.9 pips. So I was anticipating to take my shots from that particular place, of which I took my shots. the market retraced. I scalped some buys into this section of fair value gap, whereby I did offset my positions whenever it reached this section to take more sales. And I'm anticipating clear delivery to this section, the sell side liquidity, whereby there is this little eyeball. So I also used this swing low to this institution level, at least to get the precise zone at this particular point whenever getting the criteria of the unfulfilled range with the Fibonacci. So the market was in the sell side of the curve, the Euro USD, and we've seen clearly the dollar index has been bullish. So whenever the dollar index is bullish, what do? You are stocking the reverse patterns for the Euro USD and the GBP USD, because they're inversely correlated. The dollar index, we don't trade it, but instead it acts as our barometer, trying to get the strength of the foreign currency coupled with the dollar. So the high of the week was formed on Monday, and these are the profiles and the templates that did unfold on each individual days. So ladies and gentlemen, try to do back testing and consider giving this video a thumbs up if it has opened your eyes. So Mondays through Wednesday, we're always considering either the high of the week to be formed if you're bearish, or the low of the week to be formed if you're bullish. For this particular case, we're bearish, and the high of the week was created on Monday. Monday. 70% of the time on Tuesdays it do happen. So if this video has been educative and informative, consider giving it a thumbs up and subscribe, share the content at least so that you learn together with your friends. Hope it has been insightful. I wish you good luck and good trading. See you soon.